All right, traders, welcome to today's recap. This is Christian from Tribeca Trade Group, and today is Wednesday, August 2nd. So I said this earlier on Twitter, but I'll say it again with a little bit more context. But I said this on Twitter. Welcome to August. Yes, it is the 2nd of the month. It's not the 1st of the month, but some volatility has come into the market, and that's often the case once you get to August. It's tough always tough to predict. People make predictions every day, but in terms of being right about a prediction, it's tough to predict the reason or the timing of the day that you're going to see a pullback or when volatility increases. But looking at things like understanding seasonality, and of course that's not the only factor out there, but it's just August of every year. September is a time where you can kind of see some things change a little bit in the market. Now, so there are some things that are concerning, and we've been talking about them. There's a lot of talk, obviously, about this credit agency downgrade, but really, I mean, the writing's been on the wall. I mean, we've been seeing yields go higher, which is not a particularly good thing, right? There was this report out the other day about how much more the Treasury will be, having to borrow like another $1 trillion in the next couple months. I mean, these are big numbers. So, in my opinion, you didn't need a credit agency to tell you that this was going on. Just looking at the price action, and that's why we do pay attention to what prices are doing in the bond market, which is a bigger market than the equity market, right? And to what the US dollar is doing, right? Those things are going to tell you if there's some trouble. So, or if there's something that you should be worried about. So yeah, we can kind of start there, but I'm going to try to keep this video kind of short, and not and keep it to a minimum of rants. But yes, to hear the situation that we have and about how much the Treasury and the country is spending and so forth, with no real solution about how this is like how we're going to get ourselves out of this situation of spending. I don't know. I don't have the answer for that, and nor am I going to try to attempt to answer that question. But sure, long term, it's something to think about, and I hope a leader comes to the plate and addresses this. So let's get to the price action in bonds. That's as far as I'll go into those subjects. But yes, we started to talk about this last week, right? And about how bonds started to lean lower. One of the things, if you're a regular viewer of my videos, I said, watch the lows from the beginning of July. Well, we've taken those out. So yes, the more that this goes down, right? And we can, of course, look at this in terms of the rate side as well. Or we could look at this in terms of TLT as well, right? TLT is also moving down. Now, TLT has a little bit of a hammer bar there, but bottom line is the trend's moving lower here. And I do look at the weekly charts to find where we're going to find our next support, because I don't really see now that we've taken out those July lows. I don't see another area of support nearby in the daily chart, and the weekly chart is more significant to begin with. So that's 93.42. So that's another $4 down. Now we don't have to get there in a straight line, but that would be a logical place using volume at price. Notice the last VPOC being taken out there. And if you don't know what a VPOC means, go to my pinned tweet on Twitter or X or whatever they're calling it these days, and you can find out exactly what a definition of version point of control is, VPOC is. All right, so that's that. And if you're mixed up with looking at bonds and going down versus the rate relationship, I will show you what rates look like. All right, and there it goes, streaking higher and above these recent range. Again, this is the 30-year yields. Of course, we could look at other yields, but it's important to understand how a bond works. When bond prices go down, yields go higher. That's just how a bond functions. If you want to see a little bit more about yields, and then we'll move on to the next subject. But here's what it looks like. Right, we know that we've had an inverted yield curve, meaning the higher yields. Right now, the 2-year yield is of 4.87, the 3 years of 4.5. So these are also going up. Today, not so much. The yields actually went down on the short end of the curve, but mainly the damage is being done on the long end. Now, our credit spreads are going up, right? So what are credit spreads, right? That's the difference between HYG, high yield bonds, right, and what their respective treasury is doing. Now, we use IEI for that because we want to match durations, right? We want to compare apples to apples and not apples to oranges. So we don't look at TLT or anything else. We pair that with IEI because the duration is about the same in that basket of bonds versus HYG. If you don't know what duration or those terms are, you can Google them and find out what duration matching is. But yes, credit spreads. So this is kind of this is probably one of the important takeaways from the video, right? Credit spreads did move today. They widened out a little bit, but look at how low they are. And this is where you kind of have to keep things in perspective, right? The market's pulled back today, right? But look at where credit spreads have gone down to, right? Look at how narrow they are. So yeah, they probably need to revert to the mean a little bit, right? Because there has really, this basically tells you that there's just not a lot of credit risk right now. So it would be healthy for this to revert back to the mean a little bit, because these are major low levels. Look at how I'm going back 5 years. This is the narrowest credit spreads have been by far in the last 5 years. So there's not a lot of credit risk based on this measure. Now you can bring out some other measure, but this is the one that I use, right? That compares HYG, the high yield bond to treasuries. All right, so that's enough fixed income video. Let's talk let's talk a little bit about the price action in equities. So we'll start with the S&P. Well, majorly I'll just cover a couple observations here using the index charts. But yes, we started the month inside value. Note that we had a little bit of an issue here where we try to break higher, right? And what this is basically telling us, right, when we're looking at this this value area and price inside, is that we're in like a range bound situation. And of course, we could go all the way down to 44.88 here in S&P futures, and we're still range bound for the month, right? We're just kind of checking back. So that's a situation that we have on hand. We are doing things like breaking the 20-day moving average today, so a little bit different. And also what's interesting too is last Thursday we saw the VIX climb decently. And I'll bring up the VIX chart next, but I want to finish with the S&P. But we didn't get any follow through from that last Thursday. So logically, I think that we should have some follow through to the downside today on this move, but that doesn't mean that we're necessarily going to get that. Don't forget, tomorrow we've got a big day of earnings. You get Apple and Amazon, right? That's going to dictate some moves. One thing that's a positive, I would say, out of today's volatility is we did take out this downside VPOC on the 1 hour chart, right? So that's kind of, I think that was important. That was something that I signaled earlier in the day. Once we broke this value area, we begin to kind of look for the next support area. So we might bounce from that, and also this, on a positive note, what this volatility does is it kind of shakes out all this bullish sentiment, right? Remember, like a lot of people quote this, the CNN fear and greed. Be careful with that model. It's not my favorite model. I don't use it because one of the components of that is the VIX. So you can just look at the VIX and tell, they do have other components, but I'm being simplistic here. But bottom line is we did take out a level there, and we could see a bounce from that support, coming down and going back to this big volume area from a couple of weeks ago may provide some support. Now I'll go to the VIX and we'll talk about that for a minute. But yes, it does look a little bit different. So there's some mixed signals, right? The signal from here is we talked about a week ago how there's been a series of lower highs, right, in the VIX. Now this may be another lower high, but this candle looks a little bit different than some of these other lower highs, right? We close closer to the high of the day. So also you could start to see these moving averages kind of begin to move up again. So I'm not sold on that this is just a 1 day period of volatility. Did I go out and short the market? No, I didn't. I have a little bit of a hedge on, but But to me, when there's mixed signals, I just reduce risk, and I did a bit of that today, right? And you kind of wait for some things to kind of clear up a little bit, right? Let's go over to the Qs for a minute. Now the Qs, they are so really at an interesting level because 374.77 is the bottom of value for the month. So we did, I believe it's very close, but it does look like we broke that, right? And if we start to break here, then I think the next thing you want to watch on the daily chart is the 50-day moving average, right? I think that'll be interesting. There's also, we go to the 10-year chart. There's also this virgin point of control that's down here. That's at the 50-day moving average. That might not be a bad place for, a nice kind of, a bit of a washout, right? And again, that would get some of the weak hands out of the market. It would get that super bullishness out of the market a bit, right? That complacency. So that's not a bad thing, right? And we always want to have a plan, right? Some people don't like when you start to talk about where the market could go to, right? But it's called having a plan, so you know how to so that you can basically prepare for it. The other thing to notice too is, besides breaking the value area, but we're below the 5 and the 20-day moving average now, right? A general rule for technical trading that I use the 5-day moving average on my charts, is I like to see in the indices when the price action stays above the 5-period moving average. If it starts to really go down, we know that we've lost the uptrend. So for now, that's what we have in hand, right? And if you're a patient trader and looking for confirmation, I would be waiting for at least the price to get back above the 20-day moving average, and even better, above the 5-period moving average. 1-hour chart, as we will go through this exercise too, we are now below the value area. So we did break decisively, through this value area. We had a little bit of a retest. Again, be careful with these 12 o'clock bounces. I say this to our trading room all the time, that you may get sometimes this lunchtime bounce because, when the market is heading down for the day and there's weak breath, as we saw today, you might get this little bit of a bounce because it's the lowest volume of the day. But be careful. I try to tell people, be careful about chasing that bounce, because it usually, once the algos such as VWAP and so forth, once they come back online around 115, 130, they the selling may continue, and that's why this bounce really didn't go too far today. Or that's one of the reasons why this bounce wasn't a very convincing one for today. Sorry, I wanted to say that a little bit more clear. So I would watch this 375.15 level as well. Last one, we'll talk about IWM. Let's go to the daily chart for IWM. IWM, was right at the top of value where it basically ended the month, and opened up just inside. But this is a little bit stronger here for whatever reason. Right now, the picture is just a little bit stronger, below the 5-period moving average, but above the 20. So nothing to really kind of hang your hat on there, but just in the pecking order of some of the technical damage that was done with the S&P and the Qs, small caps look a little bit stronger. Note also, this is inside value for the week versus the S&P and the NASDAQ or the Qs below value. So 194.64 will be the support to watch. A couple other things that we're starting to notice with some of these earnings reports, right? We talked about AMD after hours yesterday, and this is a good example. So one of the things that I said yesterday about AMD is that it has not been a leader in the semis group. It's actually been an underperformer in the semis group. I'm not going to get into the fundamental. I'm just telling you what I see in terms of the chart. When we went over the chart yesterday, I was pointing out how much stronger the SMH, the semis ETF, has been versus AMD. And sure enough, that strength did not last long, and it actually closed on the lows. All right. So for me, this is a little bit about how I use some of these earnings reports. Will I be trading this one much this quarter? Probably not, right? Because it's not showing strength inside the group. Okay, so we'll come back to that group. I'm not going to go over too much about this group for now, but this failed to kind of, for now, take that next leg higher. Now, again, it may not be ready yet. It really hasn't. There's no major technical damage other than it's slipping below the 20-day moving average. But we'll have to wait for another time for that to kind of break out to new highs. A couple other reports, this was an unlucky day for some company to report earnings because it's a tougher market. But look at Shopify, right? Shopify is another one that started to move up to 66, right? And notice it's basically right around where it closed on a decent report. So, all of this, and kind of I'm getting to the conclusion here, is just to be patient. Right. This is a tougher month seasonally wise, right? Last month was a stronger seasonal month. So, be patient with this price action. Wait for some confirmations. In my opinion, again, I give you some of the signals that I look for, but for price in the indices to get back above those short-term moving averages, right? To see a bounce, and some confirmation that some support's going to hold, right? And that would come with this 1 hour VPOC being taken out. Let's see if we can kind of hold this and possibly bounce, from that. So that remains to be seen. For now, you could see that the price action is below this 5-period moving average. Why did this change on me? So we're below this 5-period moving average, and we need some confirmation. And there's no rush, right? Another analogy that we use all the time, because I like to use a lot of sports analogies, but wait for your pitch, right? There's no reason to, there's nobody forcing you to have to, take a swing right now in this market. Take your time, right? Set up your trades, know where your stop is, know where your exit points are, and go from there. Good luck, guys. Have a great rest of your day. Thanks for watching the video, and I'll see you tomorrow in the trading room.